Hello traders, Jason here with SwingHigh.com. It is Friday, May 6th, 2011, and this is going to be a broad market review here. What we're looking at right now is the S&P 500 tracking ETF, the SPY. And if you remember, I was talking about this inverse head and shoulders acting as a continuation pattern. Since I made that claim, I've heard a couple debates on both sides of the argument that inverse head and shoulders, one side of that debate being that they can only be reversal patterns, and another side saying that they can also act as continuation patterns. What we're seeing here is a potential continuation pattern on an inverse head and shoulders on the S&P, and we broke out of that on very light volume. And right now, we are pulling back and testing that neckline. So from here, basically next week, we have to go up, or that's going to be a failed inverse head and shoulders. So we'll see what happens there. And right now, it's coming very close to testing that line into the close here. Yeah. In fact, now that I look at that again, okay, yeah. This right here, this lower line is the neckline, and this is just one of those slanted lines that I have drawn. So we are still above the neckline as of right now, and the markets are about to close. Let's quickly run through the rest of the markets. Here's the NASDAQ ETF. Not as much of a head and shoulders, or inverse head and shoulders for that matter. A little more of a symmetrical triangle that broke out again on mediocre volume, and we are now flirting with the highs just like the S&P. I'm going to skip that one and come back to it. This is the Dow, a little bit stronger than the other two, which isn't necessarily a bad thing, but it's also not indicative of the best times to get long. Usually, I would still prefer to see the Nasdaq, the Russells, and the financials leading the way. And right now, the Russells are actually relatively weak compared to the other two markets. As you can see, we are not testing the highs as the other ones are. And here's the XLF. Excuse me. The financials are very weak, so they're still lagging. Let's look at some of the other markets. Here we go with the dollar. As you can see, we're having a very strong bounce on very high volume here. We had a falling wedge pattern that sort of failed, but now it's come back all the way through that pattern. I can draw this a couple other ways. I mean, if I could have some liberties here with my falling wedge, you could say that it still stayed in a falling wedge type pattern, but that one's not as strong as the other ones. Okay, bring some more data in there. So yeah, the dollar is showing strength now. If we can start a new uptrend, that would be bad for markets, but pretty good for, well, everyone was calling for a dollar crisis, so that wouldn't be the case if we get a strong rally in the dollar going forward. Silver, that's not silver. Silver has been pulling back very hard on extreme volume. A lot of that is because everyone was talking about this parabolic move, and everyone was afraid of when we were going to get a harsh pullback. And basically, when that's the case, everyone wants to jump out as soon as they start seeing weakness, and that's what you're seeing right now. Very big distribution process going on in silver. So we'll see if or when we'll get a bottom in that market. And here's gold, also kind of weak recently. Not nearly as weak as silver, mainly because it hasn't had such a strong up move recently. So that's what I'm seeing in the markets. And I also have a few more. I have one more video to burn today, and that's going to be a few recent trades that I've made. So thanks for being a part of SwingHigh.com.